Namaste. Welcome to my channel. Today we are going to learn about some basic concepts of national income accounting. That is, what is about operating surplus, what about compensation of employees, what is rent, royalty, like that. Some basic things to understand national income accounting. And so as we are moving to the macroeconomics, we should know what about the microeconomics and macroeconomics. Just understand that microeconomics deals with an economic unit, an individual unit, or it tells about individuals, it tells about firms or price determination. What about individual demand? What about individual supply? How a firm is reaching equilibrium? Yes, this diagram shows about how price is determined according to the demand and supply that you have learned in the +1 classes. How in perfect competition the price of a commodity is determined, how output is determined by drawing average revenue curve, average cost curve, marginal cost curve. This is about microeconomics. And macroeconomics is concerned, those who are writing board examination now this year +2, you already know what about microeconomics and macroeconomics. So what is the major difference here? It tells about the economy as a whole. It includes all industries together or all firms together, or total income, that is national income. That is how, as it is aggregate demand, aggregate supply, general employment, total income, total output, we reach this regarding the aggregate demand curve and aggregate supply, how the output, income and employment is determined. So just I want to show you what is the major difference between this is the microeconomics and this is the macroeconomics. Here we tell about what is general output, total income, total employment, so national income, etc. So just I had given you an introduction only here regarding the difference between micro and macro. Most often we used to get questions from this topic, distinguish between micro and macroeconomics with examples. Now let us move to the national income accounting. When we say about the national income accounting, first of all understand that it is about the production related concepts. Production creates its own demand. How it is creating in demand? Because production generates income. Production generates income means that in order to produce, we need factories of production. So factories of production should be rewarded in the form of land should get the rent, laborer should get the wages, and capital, who is providing capital, that person should get the interest, and the organization or the organizer or the entrepreneur should get the normal profit. So these are the rewards. So production creates a income, and when people are getting income, they will spend. So that is how national income accounting in three methods we are following: value added method or output method, then income method, and expenditure method. And production method, or what are the 4 factors of production? Let us see. Landlord should get rent and royalty. Rent means for the use of land, rent, and royalty means for using of the asset, buildings, or some plants, PLANTS, plants and equipments for an industry we need. So that should be royalty. It is not owned by the entrepreneur, he has to pay the royalty. And laborer should get the wages and the salaries in cash, wages and salaries in kind, and employees' contribution to social security. All these are known as compensation of employees. Compensation of employees. Then the capital, for the capital you should get the rate of interest. And organization or the entrepreneur should get the profit. Really profit is also the same way as a reward for his work, like undertaking the risk or undertaking the uncertainty for the, and also he is assembling, the entrepreneur is assembling land, laborer, capital. So for this he should be rewarded. That reward is known as profit. We call it as normal profit. And so these together, interest, profit, and rent and royalty together we call as operating surplus. So when we say the operating surplus, the wages should not be there. The labor is reward should not be there. So that is with the colors I have showed this. Remember that the blue is meant for the labor. This is the importance of art integration, and so that is not included. Laborer's remuneration is not included. Only the remuneration to the capitalist, owner of the capital, owner of the land, and owner of the or the organization, entrepreneur should be included. That is the operating surplus. That means no wages, no compensation of employees. Then profit can be divided into three: corporate tax, the tax given to the government; then retained earnings, a part of an income kept for further investment, that is retained earnings, something retained; and dividend, that is the share, shareholders will be given a part of the profit, that is dividend. So this is the combination what consists of profit. And then sometimes, the entrepreneur may be doing all works. He may be renting his own land, his own capital, his own laborer, like that. So together we call it as mixed income. I didn't include it here. That together we call it as a mixed income. That is self-owned resources and self-employment. That is mixed income. When the entrepreneur himself is using his own resources, means land he is using, buildings he is using, capital he is using. So capital itself is a building, because capital's definition is that wealth which yields further income. Capital is man-made. Capital is that wealth which yields further income. So the capital, not only cash, when the deposits in bank is capital, because you will get the rate of interest. And a machine you are using, and with the help of machine you are getting income, that is capital. So the capital is man-made. So the confusion is that whether land is capital. No, because land is free gift of nature. So when we are getting return from capital, that is man-made thing, there we are getting the reward, that is the rate of interest. And if an entrepreneur is using his own land or his own labor, he himself is doing his work, that is self-employment. When he is using his own capital, means self-owned resources. His own land means self-owned resources. His own buildings means his own resources. So that should be rewarded in the form of, he is using his own land, he should get the rent. If he is using his own building, he should get the royalty. When he is using his own capital, that is means he has not borrowed money from the bank, so he should get the rate of interest. He is employing as a manager, as a laborer, he should get the wages in the form of kind or cash, like that. So all together we call it as a mixed income. That I didn't write when I wrote this, when I explained this, that I am explaining that only. That is another term connected to the national income accounting, mixed income. I hope you understood. Yes, this way, write and learn. Make mind mapping yourself and learn. If you understood, yes. If you understood, go through this.